Okay, hi everyone. My name's PK and I'm joined here by Amar, who's recently completed the Property Investment Accelerator and also recently got, a really, really good deal. It didn't come easy. It wasn't a magic pill. He'll talk about that a little bit as well. He had to really he had to work for this deal, but I think in the long term, or right now, it paid off. So in this video, what we're going to be talking about is a bit of his experience of the Property Investment Accelerator. We're going to be talking about his deal, just a few highlights that I've written down. Purchase price of $350,000. So for those of you who think that property investing means buying $500,000 plus properties, you don't have to. He was able to negotiate $9,000 off the purchase price. The appraisal for rent is between $350 and $370. I'm just reading down in my notes here. So that's a positively geared property. It's in fact already rented, which is great. I think the key thing in this deal, as with many of the deals that I post and talk about, is that it was off market. So the agent, not the buyer's agent, the selling agent actually approached a vendor on behalf of Amar. So it's like getting an agent to work for you completely free of cost. He got this Interstate in South Australia. Amar lives in Melbourne without having to catch a flight or drive to Adelaide. And it has subdivision potential. So it's 1,000 square meters. You can do a battle axe. Not that Amar is going to, do that straight away, but having that sort of up your sleeve just gives you so much more optionality. And it's something you can't do with brand new properties. So those are some of the highlights, but I didn't find this deal. I can't take credit for it. Amar did. So the idea is that you guys just listen to the questions, listen to the answers, and hopefully you get some amazing, amazing value out of this. And you can go away and get a deal like this yourself as well. So I just want to start, Amar, by saying thank you for doing the Property Investment Accelerator, and congratulations on a pretty good deal. Are you happy with it?
Yeah, thanks, PK. Pretty happy with it. As my previous purchase was negatively geared, so after I started the course, my whole mindset changed around what kind of properties I should look into, where and how. And this pretty much this property will be making the money from the day one. So yeah, so that's a great outcome, and with a lot of capital growth potential as well. So yeah, thank you for this course.
Yeah, no problem. And so maybe if we start from the start, like I do on most of these interviews, so just describe for everyone, give a bit of context, because I think some people still think that to be a property investor, you need to have $200,000 in the bank and you need to be wealthy and all this stuff. Just without going into personal finances, just kind of share your property background and what you do for a living. Just kind of allow us to get to know who you are, if you don't mind.
Mm-hmm. So I'm a software engineer. I work at Seek Limited. I've been with them for close to 5 years now. So was always very savvy about data. And then when I got introduced to you by a common friend, we talked about it makes a lot of sense for me to do my investment based on hard data, based on various factors. I think that's when I decided I'll probably go with you and see how it goes, because the previous property that I buy was pretty much the backyard kind of property that I bought because I knew the suburb, I was living in it, had a good experience, I liked it, but it was negatively geared, was growing not at the pace that I was expecting it to. So I was sort of second guessing this time, what should be my approach and strategy, and that's when I got introduced to your course. It took me a while. I had some deposit, which I had saved for the next property, but how to use it, what sort of people that I need around myself to help me through that journey, especially if you're buying remotely. So that was the key question that I did not have answers for, which were all answered, not only just suggestions, but also like contacts and people who actually I enjoyed working with as well. So the great outcome is that I've got some strong relationships with people who I'd be working more of as well in future as well. And not only just the knowledge, but also good relationships, which is, I think, a win-win. So that was kind of my starting point. I already had an investment property, was looking to buy another one, but don't know how, was skeptical, was unsure. There was some lack of confidence and knowledge as well, because I was still fairly new to the investment property sort of field, and I was looking for someone to sort of mentor or guide me through this process so that I make the best decisions, because it's not a cheap thing you can go and replace next day. And then that's where the course really helped me. And all the calls that we had afterwards as well, when I had doubts, I had to pivot, stuff like that. Yeah.
Yeah, no, awesome. And so like the obvious question is, you wanted to buy Interstate. In Melbourne you can't get positively geared properties anymore. Why not just pick up the phone to one of the 15 million buyers agents that are in Australia and just get them to do it?
Well, first is I don't want to pay them a lot, and then I want to do it myself. So learning and making those decisions and having that skill in me was a big gain that I get out of this course. So rather than always relying on someone, and I generally by nature also don't like to rely on people to do stuff, especially making these important decisions for me, because there is no sort of accountability in this field. So yeah, you can't hold them accountable later on if it property you find is a dud property and you just bought it in a booming market. So by doing this myself, even if it doesn't come out to be a great decision, it was still my own decision. So the learning as well as the decision-making capability was the key thing that I came out of this, rather than just relying on someone and then again paying them for it too. So it's yeah.
Got it. Okay, and so like one of the reasons you mentioned that you did this is because you were unsure of how to buy Interstate, or you're unsure how to use your deposit. You're lacking confidence. Like a bunch of data doesn't necessarily improve confidence. Like there's so much data out there. There's probably more than 600 factors that someone could consider when considering where and what to buy in terms of property. So how was it that the course or the mentorship actually instilled the confidence in you? Like what was it that now you're sitting there hopefully thinking that I made this decision myself and I'm actually confident it was a good one?
So it's not just discrete parameters of data. The data actually builds on itself. So there's a base data which helps you decide what sort of geographies or areas you should look in, and then it becomes granular and granular and granular on top of that. So you're actually filtering out of 15,000 suburbs, and you're arriving at very few 5 to 10 suburbs which actually qualify for all those parameters. So I call those parameters, say, a filter. So as you filter through all those suburbs, you actually start gaining confidence. So these 5 or 6 actually tick everything that we wanted for a property or for an area to grow, not only from capital growth perspective but also from a rental yield perspective. So it actually instills confidence as you sort of start filtering down those suburbs. So I can't tell you right now how, but when you go through the process, you start filtering out stuff. It's like buying stuff online. As you put in those filters, this price range, this particular color, you actually start to narrow down stuff, and that's how you get confidence that this actually fits my sort of buying decision that I do want to have. And also because the data is backed by not only the current data but trends over time, over years, over months, you can actually see things happening, and you can go to previous trends and see how the market is doing now and was data able to predict those things, right? So those also things, they reinforce your decision, and then also coming off the back of your own decisions based on this data that you personally use to make your decisions, and you're doing quite well. And the other folks in the community have actually been using this, and they're actually got good outcome. So they all reinforce the confidence in this course and this whole process.
Yeah, no, good to hear. It's not a case that it just worked for me or it just sort of happened to work for you. The data doesn't care who's using it. The data is always right. And that's the great thing about it. Like I always say, even, people can call me a property expert. Don't listen to any expert. Everyone has the ability to make mistakes. Everyone is flawed. That's our nature as human beings. But when you rely on the data and have a statistically robust way of interpreting it, then it's completely objective. I think that's really what I like about it, and clearly you like it about it as well. And so like the key question, right? So you bought Interstate, and the only way you were able to get this type of property at the price you did, like it's positive cash flow, it's going to give you thousands of dollars, it has subdivision potential. When you choose to pull the trigger, you'll make $200,000-$300,000 upside. The only way you're able to get this at this price was because it was off market.
Yeah.
So just I know we can't cover the entire training in 10 minutes or 5 minutes, but just sort of what's a couple of pieces of advice that you can share with people who are trying to get off-market opportunities interstate? Because let's be honest, most of the better opportunities, the better properties aren't on real estate or domain. What's the kind of advice that you can give them, having achieved it yourself?
Invest in relationships. So that would be the key. But also keep your eyes open, because sometimes there are crafty sales agents who do want to sell you a Dutch property off market, because they know they might get exposed if they put it in on the websites as well. But definitely having the relationships with the agents who are actually willing to work with you, who are not very greedy and not upselling you other investment stuff, who actually want your success as much as their own. Finding them, working with them is kind of the key. And this course really has a separate section which dedicates to how you can find those people as well, and what kind of behavioral tactics you can use to sort of bring them to your own space where they work for you rather than you sort of work for their own profit. So yeah, I think I am generally a bit nice when it comes to negotiation, but the stuff that I learned in the last few chapters of this course really helped me to sort of be a bit more assertive in those negotiations, as well as sort of saying no when I was not comfortable, or saying no to property which was pushed onto me. Because it's not that this was the first property that I found off market. I actually found 5 or 6, and some of them were actually some bad properties marketed as good properties, as off-market deals. Some of them were sort of the vendor was quite greedy. He was still kind of having a silent auction between off-market people. So there were all kinds of stuff. So you need to keep your eyes open. But the only way you will be introduced to these properties is with solid sort of relationships with those sales agents. So they should see you as someone who is very serious, who is very committed, who can pull the trigger if he likes the property straight away. And then and on the other hand, you should keep your eyes open that not everything being sold to you might be worth buying. So both aspects of this.
That's a really good tip, actually. So just because it's off market doesn't mean it's a good deal. Like, there's lots of buyer's agents. I can get you probably 10 off-market deals in places like Logan, Ipswich, North Lakes in Queensland, out towards Melton in Melbourne, in the Sydney context. Well, everywhere's kind of hot in Sydney right now, but it's not hard to get off-market, but it's hard to get it in a market which is actually growing and will continue to grow. That's the hard bit. And then you need to find, or you need to know what makes a good property, because like you said, you can find dud properties off market, and marketing is great, but they're not actually good purchases. So those are two different things, and you're able to master both, which is really good. And I think, so then you bought a positive cash flow property. Positive cash flow, for those of you who don't know, simply means that after all expenses, like council rates, property management fees, budgeting for a bit of vacancy, not that we'll get it, budgeting for maintenance, all these things, it's still giving you money in the door on an annual basis. So like there's still, I'm still perplexed. There's like literally thousands of people that still don't believe that you can get positively geared properties, let alone positively geared properties that grow in value. One of the, I hope he doesn't mind me sharing, but I had these things called strategy calls, and like you did as well, Amar. And the person asked me, so PK, if you're telling me that you can predictably find positively geared properties that grow, then why don't you just do this yourself? And why are you teaching others? Like, if it's so awesome, why teach people? Why not just hold your cards to your chest? And I think like the one thing I'd like to say is I don't have unlimited borrowing capacity. And with an abundance mindset, just because you're teaching others doesn't mean that you can't achieve that yourself. There are literally tens of thousands of these types of opportunities across Australia, not at any one time, but over time, and there are enough for everyone. So like, Amar, what would you say to people who still doubt the fact that there are positively geared properties in capital cities? I'm not even talking regional, in capital cities. Was that something that you thought was a bit dubious, or did you always think it was possible? How did you find one?
I was exactly in the same group. I thought you can either get a good property which will grow longer term, and for which you have to pay money. So you have to get a negatively geared property which will grow longer term. You cannot make positive cash flow out of it. I was exactly in that. But after doing the course, after seeing the data for so many suburbs and kind of properties in those suburbs over time, not only growing in value, but also giving you good rental yield, well, data will not lie. So we keep coming back to data, but then that's like a trending and historical data. It's not like just this month this has happened. This is happening over time consistently for those particular stuff. And when you see that happening, you kind of get that confidence. And then while I was in the market buying property, it kept going up within those 2-3 months. It didn't stop. So on the other side, it actually kept going up. And even the rent was kind of on stress where I bought, because there are so many people looking out for properties and they want to pay even higher than asking price, even for the rent. So when you see that in market, it's one thing coming like looking from outside the market and you're like, it's not possible. But when you're all there, we are trying to find stuff, properties already rising on a fortnightly basis in a capital value, and then you can see there's a lot of stress on the rent as well, because so many renters are looking to buy or to rent, and then they can't find property. So you can see that for yourself. So I was exactly in that space. My mindset changed. My perception totally changed after this whole experience. So yeah.
Yeah, no, that's good to hear. And actually, another client recently bought in the same suburb that you did, and he shared with me the trends. The number of properties listed for rent consistently going down. So there's actually like a bit of a rental crisis here, which, as you know, for property investors, it obviously means that rents will continue to rise. So perhaps even your current rental appraisal may be on the soft side, you know, even in a couple of months' time.
It is very much. The current rent that I'm getting is only because we leased back to the vendor, and that's why we had to sort of give him a good deal. Expect to get much higher when he vacates.
Yeah, awesome. And I think, look, the cherry on the cake, I don't think you were necessarily looking for this, but the cherry on the cake is the fact that it can be subdivided. So you can do, I think, a hammerhead style subdivision. And so, you know, it's just, I think this is one of the reasons, you know, a lot of people, especially kind of well, I shouldn't stereotype it. I was going to say the Indian community, but I actually shouldn't stereotype it. A lot of people gravitate towards house and land packages because they're easy. You know, you can go to a property investment company. They will sell you the depreciation story, the low maintenance story, easy to find tenant story. It'll be in a fringe area in one of the big cities. It won't grow, but there's no accountability, like you said earlier. The thing is that when you buy an established property, you're getting it. It's already got a tenant, so there's no tenant issues. The rents will go up. You and I both know that looking at the data. It's, yes, there's going to be maintenance costs, but we're not talking $3,000-4,000 a year. We're talking maybe $1,000 to $2,000 on an annual basis, which, you know, for the extra growth that an established property gets because of land value versus new, yeah, $1,000 or $2,000 maintenance is nothing. But the main thing that I'm saying is that you can make $200,000-300,000 in 5-10 years by subdividing it, which you can't do to a brand new property. So for anyone that's listening that's still kind of thinking, hey, you know, why take the hassle of buying an established? Why not just give a property investment company $5,000-10,000 to get me a house and land package? Or better yet, they won't charge me anything because they're getting paid by the developer. Like, what would you say to those types of people, just as a education type thing, away from my course? It's just education.
It's a basic rule. Land appreciates, the house depreciates. So if you remember that, any new house and land package would have a component of land which would be much smaller than an established property, which means the land will not appreciate as much as compared to an established property, which means over time, the value of your property, rather than going up, could even go down because of location and everything, the land might not even go that up, house starts appreciating. Whereas if you bought in a very good suburb, which has all that potential, even if it is established, land component was high, land would go up, and up, and it will actually make you money rather than you losing money in the longer term. So I personally bought my own principal place of residence as established house. The other property is also established. This one's also established. I don't go for house and land packages. I like to own as much as land as possible. We need the house to get the rent, but that is not my priority. We just need it for getting good positive cash flow. But more land, the better. So which this one, 1,000 square meters, I think is a lot. So so I don't recommend anyone to go for house and land packages. It's wisdom to go for as much as land as you can.
Yeah, wise words. I hope that everyone that's watching or listening to this really heeds that. You know, there's always exceptions to rules, but in the vast majority of times, what Amar has said is, you know, just dead right. Okay, and the last thing I wanted to ask, or maybe one of the last things, is you know, for clients who already are clients of mine and are sort of brand new to the course, they've just signed up, and then, you know, people, they watch these interviews and they're thinking, okay, Amar has got a great deal. I'm not sure I can get that kind of deal. What is the advice that you would say to like my brand new clients, who, just to inspire them, you know, because you've been through that journey, they're right at the start? Is there any words of wisdom that you can share with them?
I would say don't wait. So once you finish the course, don't wait for 6 months or 7 months or 9 months to make the first step. Start using that data, start using that knowledge that you acquired, because the market is not going to stop. So even if you are stopped, market is not going to stop. So start making those first steps, start finalizing your suburbs, talking to people, then you will get to know where do you stand in this current market, what you can do and what you can't, and then you can make an informed decision. And if you have to pivot, don't be like me. I took a while to pivot when my strategy was not working. Pivot as soon as possible, so that you change approach and get that property, because the market is for foreseeable future is only going to go up for areas. So yeah, so once you finish the course, don't just sit on it. So start happening.
Perfect. And one lesson that I can learn from your experience, the end result is great, but for any clients that are watching, reach out to me for help. Don't spin your wheels. If you need to pivot or you're facing a challenge, just ask me in the Zoom calls or in the community or email. I'm always here to help you. You're not doing this alone. So I think that's one of the probably lessons that we might have been doing this interview a month earlier if Amar didn't want to bother me so much. He's too nice. So I think that's one other thing. All right, cool. And I think just another piece of inspiration as well for clients or even non-clients is, like, Amar is a busy man, family man, works software engineer. He was actually had a big project on simultaneously from doing the course. So, like, a key takeaway is anyone can do this. It doesn't matter how busy you are and you're juggling kids, work, sports or whatever. You can do this. You just need to be disciplined. It doesn't take hours and hours and hours. It just takes focus and discipline. That's the most important thing, quality over quantity. So just last thing, Amar, and this is a bit of a marketing thing. If anyone's kind of on the fence, thinking about, look, PK's course, obviously it works. There's so many, like, dozens of interviews and reviews and everything, but it's so damn expensive. Like, this is not a cheap $3,000 course. It's eating away from my deposit. Should I go for it or not? What would you say to those types of people who genuinely don't know how to buy Interstate, don't know how to read the data?
I talk of ROI all the time. Even time is an investment, so not just money. And compared to the kind of value that I got, the outcome I got, this was nothing. Like, you could have even charged me 10 times more that you do charge, and I would have happily paid for this kind of outcome that I've got. So this is not only one property. This is a journey which has just started, and the fees for starting that journey, putting you on the right path, helping you out in your very first steps, giving you people around so that they can also support you in making your decisions, and then working with you. Like, for example, previous sort of the property manager, the mortgage broker, the conveyancer that I worked with when I bought my previous property were horrible. I had a very horrible experience. But these was a breeze, to be honest. They were coordinating with themselves, very professional, very nice people, very savvy people, to be honest. So the kind of team that you get out of this course, the kind of the guidance that you get out of this course, the kind of knowledge that you get, the kind of mentorship that you get, the kind of data that you get, and the price you pay for it is literally nothing. I would say that. So you're actually doing a help to people like us who are just starting or who are very fresh newbies like me. So get our foothold in the market. So you're actually doing a public service. I would say that.
It's not a charity, but yeah, I appreciate the words. I truly do. But if I take that advice literally and charge you 10 times what I do at the moment, I don't know, Amar, if you would have said yes. I'm just saying, $60,000-$70,000. But
maybe not at the first one, but for a second one, which could be very expensive, I would say, yeah, it makes sense for it.
Yeah. Okay. All right. Well, I appreciate the words nonetheless. Cool. And thank you for your time. And for everyone who's watching, like, please, I just want you to take away from this that you can do it too. If you know how to do it, go and do it. You don't need my help. If you don't know how to do it, then I can genuinely help you get exactly the same results as Amar did. And, like, it's not hard for me to say that in a year's time, this property is not going to be $350,000. It's not going to have a 3 in front of it. It may not even have a 4 in front of it. We don't know exactly, but this is going to go up big time. And it's not because of the current boom. All the data, all the system that we analyzed suggests that it was going up. The data was brewing for a long time, which is really what we want to see. So look, if you're watching this on YouTube, hit the subscribe button, hit the thumbs up button. That will blow this video up, reach more people. On Facebook, please ask comments, please ask questions. I'm genuinely here to help you. And if you're watching on any other social channel, please engage with this video. Let me know what you think, share it, and hit like or love. And that way, just more people can hear this message, because I know there's so many people right now in Australia with like 100, 200,000, maybe even $50,000 in the bank, and it's just wasting away because literally you're making no money in the bank. So if you want to go for Bitcoin, go for your life. I can't help you there. But if you want to go for real estate, like, you can make tons of money. All right. Well, thank you, Amar, once again, and congratulations. Genuinely, I can't take the credit for any of these types of results. My clients do it themselves with my support. And my name's PK. I'll leave a link below as well if you want to become exactly like Amar, and how you can do that. All right. Thanks, guys. Catch you later.
Okay.